wear your seatbelt. That is not what I am saying, but that is what an editorial in a business newspaper said after the International Monetary Fund, or the IMF, released its July update of the World Economic Outlook this week. Why should you wear your seatbelt? Because the IMF lowered growth projections for the whole world, as in the global economic growth, and specifically for India, which is what concerns us more. At the same time, the IMF said that there is a possibility of a recession in India in 2023, the way things are growing. So that is the reason this editorial said, wear your seatbelt. In the same business newspaper, on the same day it said, wear your seatbelt, there was an interview with the CEO of a global bank, a huge bank, which said India will be the poster child for global economic growth. So what really is happening? Are we headed for a recession, or is this the IMF being alarmist, or just trying to be very careful so that something goes wrong next year and we don't blame the IMF, saying you guys projected such high growth? Hello and welcome to Macro Sutra. I am YP Rajesh, managing editor at ThePrint, and I have economist Radhika Pandey with me. Hi Radhika.
Hi.
So IMF saying one thing, others saying another thing. We talked about whether IMF is being very alarmist. But before we go into that debate, tell us a little bit about the World Economic Outlook the IMF puts out. How frequent is it? How does it go about measuring growth and other economic indicators?
Yeah, so the International Monetary Fund comes up with what is termed as the World Economic Outlook twice a year. So it comes up with one edition of World Economic Outlook in April and one in October.
Okay.
And then in the month of July, it comes up with an update to its April outlook, and which is what has come out a couple of days back, which is the July update to the World Economic Outlook, where they consider whatever projections they have made about the global economy, about the advanced economies, emerging economies, whether they still hold true, or whether there are more downside risks to those growth. So this is not a comprehensive document like you see the World Economic Outlook report that comes out in April and October. This is just an update taking into account the developments that have taken place since April to July.
Okay. So the revision in growth projections are made based on what has happened between April, May and June, right?
Yes,
so or July, 4 months or 3 months.
Yes.
So what has changed in these 3 or 4 months, Radhika? Because things have been on a downturn since the Ukraine war, and the post-COVID recovery has been affected by it. But what has changed for the IMF to become so bearish or gloomy?
So for India, if you see the April World Economic Outlook report, they have projected a growth of 8.2% in the April outlook for this year, 2022. Now, from April to July, what has happened is a lot of aggressive rate hikes by the US Fed as well as by the Reserve Bank. So Reserve Bank has also raised interest rates by 90 basis points. So they are now contemplating that this unfavorable external conditions and the policy tightening by the Reserve Bank of India would have a bearing on growth. So particularly for India, that is why they have slashed the projections for the current year from 8.2% to 7.4%. The point to note here is that now the projections have turned more realistic, and they are in conformity with some of the other projections made by other agencies, like ADB last week came up with projections for India. That's also around the same range. It's 7.2%. Reserve Bank of India's growth projection for India is also 7.2%. So now it is still optimistic, but it is closer. So 8.2% was quite over ambitious. Now I think we are more realistic to the projections, and from here on, depending on the trajectory of rate hikes, we will see how the situation pans out. But as of now, they seem to be more realistic given the current conditions.
But the IMF is also quite pessimistic about global growth, especially the US and China.
Yes. So if you see the overall global growth projection has been revised downward to 3.2%, primarily due to US, China and India. So for US, they have reduced the growth projection by 1.4% from April to July, mainly because they are contemplating that aggressive rate hikes by the Fed will lead to recession. So they have used a number of indicators, and we can discuss those in detail, to show that there could be recession in the US in 2023 based on a number of indicators. For China, they are saying that because of the lockdowns and because of supply side restriction, China would also face growth headwinds, and also due to the housing sector, the problems with the housing sector. So those are the three countries particularly responsible for the revisions in the global growth projections as a whole. In addition, they are also saying that EU will also face a slide in growth, primarily because of their dependence on Russian natural gas and so on. So they will also face growth downside. On the upside, they are saying that, commodity exporters, Indonesia, Malaysia, other emerging economies, some of them would be insulated from this shock. And for them, there has not been any downward revisions in growth.
In fact, in your column, Macro Sutra, which published on Friday morning, and which the link will be in the notes, the description of this video, you talk about how the Federal Reserve of Atlanta has already said that the recession may have already started in the US. So we're not even waiting for it, but there are indicators of a recession which have already started. But at the same time, there is a Bloomberg survey which says that the chances of a recession in the US are only 38%. So we're talking about the calendar year, right?
So there are two things here. There is one episode of recession which might have already started, because if we understand recession going by the textbook definition, it is 2 quarters of consecutive GDP contraction. Now the US economy in the January to March quarter, it registered a contraction, and if we go by the April to June quarter, whose official estimates are not yet out. So this is the Federal Reserve Bank of Atlanta does what is termed as nowcast. So there is a conceptual difference between forecast and nowcast. Forecasting is when you are predicting the values for the coming year or next year, 5 years, 10 years. But nowcast is when you are sitting in the same quarter and you are projecting what would be the growth for this particular quarter. So Federal Reserve Bank of Atlanta's model suggests that for the April to June quarter also there could be a contraction, because they are looking at the same indicators which the official estimates look at. GDP is it's just an aggregate of a lot of variables. So they are looking at all those variables and they are saying that there could be a contraction. So if we go by that estimate, if we go by that metric, there could be a short-lived recession already in the US. But that is only for this year. What the Bloomberg Economic Survey is projecting is for the next year.
That's 23.
That is 2020. Yes, that is 23. Based on the fact that if there are aggressive rate hikes going forward, there could be another round of recession for which they have increased the probability. Earlier, they thought that there would not be any recession, but going by a host of indicators which are more forward-looking indicators, they think that there could be a 38% possibility of recession in the US next year.
Okay. But you are very clear, Radhika, that the chance of a recession in India is quite slim.
Yes.
What makes you so confident?
So there are a number of factors. So let's first just look at the US, just to talk about, get some perspective on whether there could be a recession in the US first, because we know that US is a dominant economy. If US sneezes, the entire global economy catches a cold. Yes. So let's see what is happening in the US first. So there are mixed signals. It's not that the US, going by all indicators, we see that the US will go into recession. Because by GDP, we can say that, okay, there could be recession. But if we look at some of the other indicators, like the job market data, the US job market is still doing quite strong. So the opinion is still divided on whether there could be a recession in the US in next year. Now, also if we look at some of the inflation projections which are made by the IMF July update, we see that inflation is seen to be peaking this year. Okay, so this year the global inflation is projected at 8%, but next year it is projected at around 6%. So if we see this peaking happening only in 2022 and then some signs of moderation, then the pace with which the advanced economy central banks will increase interest rates will also slow down. Now, if that happens, then the possibility of recession in the US and consequently in India would be lower, because if your interest rates do not rise to that level, then the interest rate differential would not turn that narrow and it would not lead to exit of foreign investors from India to the US, and all the sources of external headwinds would get a bit scaled down. So that is number one reason that we say that the external headwinds impacting the Indian economy could see a moderation in the coming months, going by the inflation projection, going by the projections of oil prices, which again have been made by the IMF. According to the July update, it says that there could be a 12% decline in oil prices in 2023. So now if this happens, and given that oil is our major source of import, we could see less pressure on the rupee. We could see less of exodus of foreign investment. So external headwinds would be less of a problem. Domestically, if we see, we are our mostly all the high frequency indicators are performing quite well. Goods, services, if we look at particularly services sector, we are seeing foreign tourist arrivals, air traffic, rail traffic, these are all picking up after the COVID has receded. So domestically, economy looks strong, and primarily it's driven by external headwinds. And if external headwinds also show some signs of receding, then the possibility of recession gets lesser.
In fact, you quote the same Bloomberg survey of economists saying that the probability of a recession is zero for India.
Yes.
And there are also these high frequency indicators like credit. Credit is picking up in India.
Credit,
so what is driving credit?
Yeah, so that's a very defining feature of the current few months that we are seeing in the economy, that credit is picking up after a long spell of muted credit growth. And another noteworthy feature is that credit to industry is picking up, because in the last few, in 2021, credit growth was primarily driven by households. Households were borrowing as a part of distress borrowing. They were mortgaging their gold and taking loan. But this time we are seeing that loans by industries is picking up. And primarily also the large industries credit demand is picking up. So that is on the demand side primarily because they have already deleveraged a substantial part of their balance sheet. They have repaid their loans. So now they are willing to make fresh investment. And also if we look at the capacity utilization ratio, which is a very important indicator of what is the investment potential of the economy, that has also picked up from 72 to 75%. So clearly there is a demand for credit. Coming to the supply of credit, banks are also in a better shape. So if we look at the financial stability report of the Reserve Bank released on 30th June, we see that the banks are performing much better. So their bad loans have declined. So they are also ready to support credit growth. So that is one reason.
The other one you talk about is the rebound in consumer sentiment. Consumers are more optimistic. The services sector is also bouncing back. So, I mean, we should not get overexcited, I guess, because this is a slow process. But at least it's moving in the right direction.
It's moving in the right direction, particularly if you look at consumer sentiment and compare and contrast with consumer sentiments data for the US. In India, the consumer sentiments have started to pick up in July. Now, it may be short-lived, but the point to note here is that after 3 to 4 months of muted growth in consumer sentiment, in July we are seeing a strong growth. It could be due to the sowing season. It could be due to the fact that normal monsoons and sowing activity has picked up. So rural sector consumer sentiments have picked up. But we need to see whether this is sustained or not. But again, it's a very lagging indicator. And if consumer sentiment start to pick up, households start to become more optimistic, that is a good sign for the economy. Because comparing with the US Michigan Index of Consumer Sentiments, which we have cited in this article, there we see that there is a sharp slide in the consumer sentiment. So consumers are pessimistic in the US because there now inflation has started hitting their budget, it started hitting their spending power. So there we see the consumer sentiments at muted level. But here we are seeing a recovery.
Okay. But exports can be a problem.
Exports can be a problem. 2021-22, we saw exports doing very well, booming, and there were diversification. But now going forward, although theoretically a weaker rupee should support exports, but because of the possibility of recession in the US and the fact that US is our major trading partner, and IT services exports will suffer a lot if we see US economy getting into recession, because the demand for IT-based services will come down, because their discretionary demand will come down. That we are already seeing, actually, if we look at some of the financial results of the IT companies, we've already started seeing that impact. Primarily, it's a combination of a number of factors like attrition rates and profit margin getting impacted. But the weaker rupee and the fact that there is recession in the US, slowdown in demand could aggravate the problem of our software-based services.
Let's take some questions from our viewers. We've been seeking questions on Twitter and other of social media handles of ThePrint since yesterday. The first one is from Deepak Denny. Deepak says, Joe Biden, as President Joe Biden of the United States, has claimed that recession has not yet hit the US shores, despite there being negative growth for 2 quarters. Critics argue that this is deliberately changing the definition of recession. Is there any truth to this?
So, recession is a combination of a number of factors. See, if we just go by the narrow technical definition of recession, by that metric, US has entered into a recession. But generally, we should look at a broad array of indicators and not just the GDP. And therefore, if we look at other indicators, there are a host of indicators to look at. You know, why ignore employment data? Why ignore corporate sector results? So the US economy as of now is giving mixed signals on recession. There is no clear consensus that US has entered into a recession. But yes, going by the just the textbook definition, if we just restrict and if we just narrowly look at the GDP, then yes, US economy has entered into a recession.
Akshat Mohanta, we'll take a second part of your question because I don't think we can forecast what is the forecast for the pound, the INR, those we are unable to deal with those kind of issues. But you're asking a second question where you say, what is the reason for the FII and FPIs to enter back into buying territory after months of incessant selling?
Yes, so we've discussed this last week also, but we can talk about it since last week, what new developments have happened. So one thing is that, the FPIs or foreign investors exit when the dollar index that we spoke about last week, dollar index is a gauge of the strength of the dollar. It's an index which measures the competitiveness of dollar against its major trading partner. So, till last week, the dollar index was surging. After that, what has happened is that, other countries' central banks, like the EU central bank, has also increased their interest rate by 50 basis points. So we see some kind of retracement of the dollar index because now euro is picking up. So dollar index is declining, and the other part is that now this call for recession is getting louder. That is also putting pressure on the dollar index. So these two factors, again, possibly a favorable outcome for India, has led to some inflows. The other point is that up to 75 basis points hike, which the US Federal Reserve did yesterday, that was already priced in by the market. So it was not, it didn't come as a shock, it didn't come as a surprise rate hike, because earlier it was projected that there could be 100 basis. Initial reaction was that, 9.1% CPI, red hot inflation, there could be 100 basis points rate hike. But the Fed went in with a 75 basis points rate hike. So that also resulted in FPI inflow. So it's a relative measurement where they look at the external headwinds, they look at the strength of the dollar, strength of other currencies, what's happening to oil prices. So all these factors in combination determine whether FPI will enter or net they will exit the market.
We have two questions from viewers who haven't given their names, so I request our viewers to give names so that it's we can address you and we know who's asking this question. With economic problems in Sri Lanka, Pakistan and Bangladesh also now seeking some kind of help from the IMF, do you think these factors add to India's recession concerns, or do they have any impact or no impact?
So we have to look at our own vulnerability indicators. So we should take a cue from other countries and, take a lesson that we also, along with all the external headwinds, we should be also looking at our fiscal and debt indicators. So what's happening to our debt, what's happening to our foreign exchange reserves, what's happening to our various vulnerability indicators, what's happening to states. So this sets the context for the fact that no country is immune, and we all have to, all countries also have to manage their vulnerability indicators, such as, short-term debt to the total debt. How much is their country's foreign currency borrowing? Because if there is a huge, if there's a huge proportion of foreign currency borrowing, then rupee slide will have an impact on that. What is our fiscal deficit? What's happening to our debt to GDP ratio? So all these factors will determine the vulnerability. So while that's the challenge that even the monthly economic reports of the Ministry of Finance have flagged, that they have to do a tightrope walk between managing growth and managing deficits and debt. So that's what is the context of this question.
The next question, again, which doesn't have a name, is RBI doing enough to prevent India from heading into a recession?
Reserve Bank of India has been doing a lot since since the pandemic. It has been doing the bulk of the heavy lifting on supporting growth. We saw that during the pandemic they reduced the interest rates, they provided credit, they introduced a lot of schemes, regulatory forbearance to allow banks to lend to micro, small and medium enterprises. So Reserve Bank of India has been doing a lot. At the same time, only the reversal has happened only from the month of April, when it became absolutely clear that now they have to shift gears and place their utmost priority on inflation, because inflation is becoming broad-based due to the war and due to the opening up of the economy. Inflation shifting not just from supply side, it's also becoming demand side. So now they have shifted their policy priority to inflation, and rightly so, because Reserve Bank of India is an inflation targeting central bank. So its topmost priority is to manage inflation, and if it's able to manage inflation, that's its biggest contribution to maintaining growth.
Last question, Radhika. I had tweeted our video question seeking tweet by saying, or is IMF being alarmist? So to that, someone called Being Azad on Twitter, I'm sure that's not his name, says, but ADB has also lowered the growth forecast. So is that not a double check, as in both ADB and IMF are saying the same thing, but then ADB did not forecast a recession?
No, ADB, so it's not just ADB, even World Bank, ADB, all the other private brokerage firms, they have all revised downwards the growth projections for India, primarily because of global headwinds and inflation concerns. Because when there are inflation concerns, then there is tight monetary policy, and beyond a point, a tight monetary policy starts affecting the spending power of people, household, it affects their consumption. So they have not flagged the recession risk. They are only revised the growth forecast. The ADB has revised the growth forecast because of inflation and geopolitical risks.
Okay. Thank you so much, Radhika. I think we've addressed the fear of recession and why the chances of recession are very slim. The Bloomberg survey says it's 0 for India. And let's hope it stays that way. And in fact, let's hope growth picks up more than the 6.1% which the IMF has forecast for 2023. We will be back with another episode of Macro Sutra next week. And also, I would request our viewers to send us suggestions on any issues you would like us to do a Macro Sutra. And if it works for us, we will take it up next week. So please send us your suggestions on our Twitter handle and our other social media handles. Until then, stay safe, have a great weekend, and we will see you next week. Thank you.